Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for July the 8th, 2010. Now our first position for tonight is going to be again in the Euro-US currency pair. Hopefully everybody that came out this morning had a good trade on this today. We were trading this live during the pre-market trade review. Our trade was entered in at the 125.60 area. We got a very nice move up to the high of the day at the 126.66 area. Now for tomorrow, we're going to be looking to do more of the same. Yesterday we were trading, or today, excuse me, we were trading off of the 3-day predicted moving average. Now for today, we're going to be doing the exact same thing. This is going to seem somewhat repetitive, but that's what the game is here. Now, looking at the 3-day predicted moving average, we can see that it's changed today. Yesterday it was sitting at 125.55. It's now sitting at 125.97. We're going to continue to use that 3-day predicted moving average, respecting the fact that we have a fresh crossover on this triple EMA cross. Now that we've identified the area of 125.97 where we want to get in. Let's go into the daily report and have a quick look and see what we've got from Vantage Point on that regard. We can see we have 125.49, 127.19. So 127.19 is our target area for tomorrow. The 127 area could be a little tough, so I certainly wouldn't object to exiting those positions at the 126.90, 126.95, just because whenever we get near a round number like that, like 126, 127, 128, these rounded numbers seem to represent support and resistance for whatever reason, just the way the market looks at it. Plus, there's always that possibility that there's exotic barrier options attached to that level. So we always want to be mindful of this, and there's nothing wrong with exiting a little bit early. So if we're going to get in at that 3-day predicted moving average, we're going to say the entry point for tomorrow, an acceptable entry for tomorrow will be anywhere between the predicted low of the day and the 3-day predicted moving average. So that comes in between 125.97 and 125.50. That's your target area for an entry. Anywhere in that area is fine. Myself, I'm sticking to the upper end of that scale because, again, we've got a pretty strong move here and we're not oversold just yet. So looking at our other indicators here, our predicted true strength indicator is moving towards that overbought territory, but it's not there yet. The trigger is holding back. The predicted MACD just above the zero line, everything looks good there. So I still see Euro US is in a pretty strong upward move, but it is dependent on these other markets, specifically the equity markets. The commodity markets, the euro has been somewhat ignoring with the gold contracts moving lower. The euro still is moving higher. Now, the one thing I want to point out is the light sweet crude oil. I had talked extensively about that in the Forex weekly outlook, that I felt that either the euro futures or the crude oil futures, one of them was in a false break. And it was my position that's the crude oil that was in the false break and that it was going to reverse higher. We had profit taking amongst other things prior to that US long weekend. Now that we've come back into this week's trading, crude oil is actually made substantial gains. So we've closed the day very strong. So that brings us, of course, that's going to lead us right into our next trade, which is going to be crude oil. Now, we are still somewhat counter trend here, but I do like the way this is setting up. The predicted true strength indicator we can see here is running completely flat. This tells me that this is likely to start breaking higher, as is the predicted MACD. The predicted medium and long-term differences are already turning up. So our key levels here, 74.97, 74.30, and of course 73.36 with a close of 74.07. So the target area to break through here is going to be the 74.97 area. It wouldn't surprise me if that area gives way in Asia tonight. So let's go in and have a look at the predicted highs and predicted lows for tomorrow and see if we can, again, just fine tune this entry point. Now this is going to be a much certainly a more volatile trade, but we can see that we've had 5 consecutive days down on the neural index. We've now just turned positive. We've got 72.59 as the predicted low, 75.21 as the predicted high. If we can get above the 74.97 mark, I think we're going to get a good run at 76.77 by the end of the week. So for now, on a pullback or on a dip tonight, we're going to be looking 72.59 is our predicted low. Now let's go back in and look at those, the 3, the 8, and the 18-day predicted moving average again. You know, keeping in mind the 72.59 number is certainly one that's of interest to us. Now our 3-day predicted moving average in this case comes in at 73.36. Now the point of interest here is that it's below where the market closed for the day. So if support reverses, and if resistance, I should say, reverses and becomes support, this 3-day predicted moving average from Vantage Point is still very useful to us. So 73.36 is the recommended entry point I'm going to suggest for tomorrow, and we're going to be on, that's a relatively shallow pullback. And again, the way the market is looking here is that the pullback being relatively shallow in that 73.39 area, we're going to use that to our advantage in this particular case, and then we would like to see a break of that 75.97 area. Now, those are our two main trades for tomorrow. So I do think we have time for another trade here. So let's have a look again. I see some very good opportunity in the Forex market. Now, if I'm correct in my assessment of what's happening with crude oil, this should put extensive pressure on the US-Canadian pair. Now, looking at our close today, 104.71, we have 104.72 on the 18-day predicted moving average from Vantage Point. Hopefully everybody can see this. Yesterday we came right down to the 18-day predicted moving average from Vantage Point and then bounced off of it and then shot all the way up to the 106 area. However, as soon as we got up to that 106 area, it immediately failed. We've closed right back down. We can see the low of the day here, 104.67. We've actually breached the 18-day predicted moving average slightly. So what I'm suspecting is going to happen here tomorrow is we're going to get a slight retracement higher, probably into that 105.50 area. When it does, the sellers are going to be waiting there for it. So we've got our predicted true strength indicator is getting ready to cross the trigger. Our predicted MACD is moving higher above the zero line. However, our predicted medium and long-term differences are both coming down. They are not moving higher. The uptrend on this, the brief uptrend that we had on this, is definitely weakening. Now, there's a number of things that are causing this. The equities, the commodities, the strength of the euro, all of these things play a part. This is what the benefit of intermarket technical analysis is. So taking all these things into consideration, we can see that these two candlesticks, now this candlestick down has managed to push its way lower, and the top of this candlestick here is much lower than where it was yesterday. We can see that we have 4 consecutive candles just below this 107 area. I talked again extensively about this in the Forex Weekly Outlook, that I felt that the US-Canadian pair was in a corrective phase inside a broader 108 to 99.35 range that we've been playing for essentially the better part of 2010. We can see going back right into here to April, all of this resistance in this 107 area, all of which this is a very bearish outlook for the US-Canadian pair, with a number of reasons why the Canadian dollar should strengthen. However, we still have this triple EMA crossover to deal with. Our other crossovers to the downside. Let's go in and look at the daily report now and see exactly what we're looking at for tomorrow. Now, again, with the US CAD, we can see that we're consistently making lower closes. First thing I want to point out, we're at 106.25. Then we went to 106.34, 105.39, and today 104.37. This suggests to me tomorrow we should get close to 104. Very good possibility. So our predicted low from Vantage Point tomorrow also agrees with me. 104.20 is the predicted low, 105.52. That's the broader range for the day tomorrow. So on a move towards 105.52, we want to use this to set our short positions and be prepared for the 18-day predicted moving average to have a sustained break of this 104.72 area, which is currently providing fairly significant support. So those are the market positions for July the 8th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.